Welcome back to Golden Rule Radio, your weekly recap of the precious metals markets, as well as the markets that impact the precious metals prices. And boy, have we had some swings this week, aided a little bit by today's Fed announcement, which we'll get into in a little bit. But Miles, show us what's been transpiring in this stair step down in gold and silver and platinum.
Yeah, the anticipatory reversal. I made it. I thought I'd have to cut that word and say it about 5 or 6 times, but I nailed it. The anticipatory reversal.
2 for 2.
Coming in from the expected rate hike, which we did see today, 50 basis point rise in the Federal Reserve rate today. So leading into that, you are correct. We had a pretty significant decline in gold going from around 2,000 all the way down to sub 1,900. Got down to even sub 1,850, if I'm not mistaken. And then a solid reversal back up about $30 or so today. Not unexpected. Short term, 3 drives pattern down, RSI divergence coming into kind of a previous high dating back to like January before we had that significant breakout up. Coming up from the 1840s into the 1880s where we're at now, we definitely need to see some more growth and significant short-term higher high. I think we're looking above 2,000. I'd like to see gold make its way up there. Just don't know how long that might take. Realistically, we go back to the beginning of 2021. We're down at 1,680. We get all the way up to 2,080. That's $400 for those of you that don't have a phenomenal brain calculator that I do. 20 minus 16 is 4. And we've come back down to about halfway, maybe a little bit below halfway mark on that. So really clean moves up in gold in this enormous trading range we've been in over the last 2 years between high 1,600s and low 2,000s. Question is just when, with interest rate rises, with expectation of the Fed tapering back the balance sheet and what we're seeing in the equities market, are we going to see currency crisis caused by the inflation rates that the Fed's now admitting to and higher gold prices going forward?
I'd be very encouraged to you as the gold owner, somebody that's already acquired the metals, because gold does well in inflation, obviously, as we've seen, but it also does well in deflation. Gold has done very well with this incredible 20-year high in the U.S. dollar that you did such a great job diving deeply on last week. And so I would say, look, be encouraged. Yes, we did get a reversal. I think the majority of today's gold reversal and the equities market response to the Fed announcement came not because they had priced in the 0.5 point rate increase, but because Powell said there is no plan to have 0.75 point incremental increases starting in June. And that was a 95% chance. So the markets loved the fact. Initially, there was no response by gold or by the equities to the 0.5 point rate hike announcement. And then suddenly, the deeper he got into the conversation, wait a minute, no June, no summer 75 basis point hikes. Then the market partied and celebrated. I think the Dow's up over 800, almost 900 as we're recording here now. So keep that in store. What about silver? What are you seeing there? And actually, before we transition to silver, I want to point out in your charts, those key support numbers, both from a short-term and intermediate-term chart, were almost merging. So you were right around the 1841 and 1853 as the key floor on gold. And those are the areas that we've bounced from. So well done. And may those hold and be the launch point for resumption of bullish chart activity.
Moving over to silver. Silver, obviously, more volatile than gold, similar pattern. We had a little RSI divergent move back up after a drive pattern down and a pretty nice jump up in silver here. I think we're up about $1 today on the silver price. So the thing I do like most about this is if you look at all the bottoms in 2022, we do have a rising floor. It's a shallow rising floor, but we've failed to put in a lower floor going back to at least October of 2021. So silver has been putting in higher lows, higher highs, and is stair-stepping up. The range is big. So it feels like we're having these massive volatile swings in silver because we are, but we're looking at highs as high as 27 and lows in the 22, 21 range if we go back 6 months. But we do see a pattern of higher lows and higher highs in a consolidation growth phase question is just, when do you have the breakout? When do we get above $30 on the spot price, move up to 35, 40, 50, do what gold has already done? This is a stall in a long-term multi-year bull market in the precious metals, which began in gold in 2015. This is a time of rest and recovery that the precious metals needed before we have the next breakout phase.
To your point on the volatility, though, this reversal in silver is big because we did touch that floor this morning prior to the Fed announcement, and we're up 4.4% from that floor now as we record. That's what that dollar move represents that you alluded to. So that's also very encouraging. But at the end of the quarter, silver was up 9.4%, and prior to today's action, it was down 1% year to date. So that's a huge amount of price fluctuation, and we've seen similar activity in platinum. Why don't you kind of jump into that?
Yeah, platinum, same. Decent drop off, 1,200 down to 900 is a pretty significant decline just since March. Percentage-wise, that's a lot of percentages. But we had what I called the Maginot Line last week's show that we've hit a number of times. It was a breakout point going back to like November of 2020. We hit it in September of last year, December of last year. We just hit it again here this past week, and that's right above 900, like 908, 905, which is also your long-term 618 fib. So the thing I really like about the platinum chart is the last couple times we've hit it. Generally, I would argue that if you keep hitting a price over and over again, eventually you punch through. So normally, if you see multiple touches in a row without breaking into new higher high territory, eventually, in this case, the bulls would lose momentum, the bears would take over, pushing platinum down. Now, the thing I really like here is the high point we put in November at 1,100 was lower than the high point we put in March of around 1,200. So we're seeing a flat base, but rising highs. So if we end up seeing another higher high here, I would argue that the bulls are remaining in control of the platinum market and looking to push it higher, looking to push back the 2021 high of like 1,350, 1,300. So I'm actually pretty optimistic on platinum, even though we keep kind of bouncing. For some reason, every time we hit the ground, we bounce a little higher than we did last time. And if that pattern continues, I'm going to remain very bullish, even in the short term, on platinum.
It's even happening quickly. Yesterday, we were up 3% in platinum. Today, we're up 3.5% in platinum. So it's making up that ground and shooting over 1,000 very, very quickly.
Now, all this hinges on what we started talking about, and that's the dollar. Again, I argue anticipatory rise in the U.S. dollar on top of what we talked about last week, where you're seeing dollar increases because of liquidity coming out of the equities market. So the dollar did, once again, Robert wins, stay just shy of 104 on the DXY. It's never going to happen for me. And we did have a pretty strong turn down on the dollar today from just shy of 104. We're at about 102.5 at the time of recording. So long way to go down to make up for all the growth. I mean, we're talking about going from sub 90 to 104 just since May of last year. So in a year, a long way to go down on the dollar to argue any type of bearish continuation. But it's got to start somewhere. So maybe this is it. Third time we've failed going up in the dollar over the last 5 years. And something we brought up last week, the first time we hit 104 back in 2017, compared to the second and third time, or where we're hitting it now, dollar DXY index on a global scale, exact same level it was 5 years ago. Looks pretty good, right? Except gold's up 65%. And I think that's an important thing to remember, because I don't know anybody who's paying the same for gas today that they did 5 years ago, or groceries, or in our case, precious metals.
That's showing the devaluation of the currency right there. So it is a little bit of a chink in the armor. It is down that full point. And keep in mind, too, gold responds to that. So, of course, gold would be up today. Gold also responds to the money supply. And what the Fed did with their announcement today is come out with a double barrel approach. Yeah, they're raising rates 0.5 basis point, but they also said they're in discussions to reduce their balance sheet. So they're going to shrink their $9 trillion portfolio. That's far more reaching in terms of its economic and market impact.
Yep, I'll believe it when I see it.
Exactly. So are they talking or are they walking? And so we'll have to see how that plays out. Meanwhile, oil remains over 108. Commodities are staying hot. The equities market certainly reversed, but keep in mind the equities markets needed to reverse. The NASDAQ was down 21% year to date. The Dow down 9%, the S&P 500 down 13% year to date. Those are terrible, terrible numbers, all while gold and silver are up, bringing a hedge to your portfolio. This is why you own it. So yes, you want to see higher metals prices. Remember at what cost that's occurring.
So that's going to do it this week for Golden Rule Radio. As always, we appreciate you stopping by. If you liked what you heard, hit the subscribe button, ring the bell. If you have any questions, make sure to add them to the comments. Or if you'd like to get your question answered personally, why not give one of us a call? We can be reached at 800-525-9556. You can also find us on Twitter at ICA Gold or Facebook at McElvaney Financial. Thanks for listening and have a great week.